tell me a little bit about your personal background and role and your expertise and what you bring to Fleetcore?
Sure. So I'm titled as Group President for our international business, which basically covers the UK, Europe, Russia, and Australasia are the main geographies where we have presence. I run various businesses within that region through my team. Those businesses operate pretty much exclusively in the B2B space, B2B payment space, with a heavy focus on fuel cards and fuel card payment systems. But in addition to that, also have some businesses that operate in the sort of B2B software business or software space as well, SaaS space, within the fleet domain. And Fleetcore as an organization, again, it's predominantly a B2B payments business. So we are one of the largest US B2B payment businesses, competing directly with banks and other Fintechs on the business payment side. We're also one of the, if not the largest now, foreign exchange, non-bank foreign exchange businesses, cross-border payments, let's call it, sounds a bit better, cross-border payments businesses globally, and again, through a couple of acquisitions that we've made over the last couple of years. So, we're essentially a B2B payments business. My background is payments for the last 25 plus years. Been at Fleetcore for 5.5 years. I spent 11 years at MasterCard in a variety of roles on both the commercial payments and the consumer payment side, both on the product side and running businesses. I also spent time at Citi in, again, commercial payments, and at Visa for a short period of time in various roles on the product side. So I'd say, pretty well versed in payments generally, with a bias towards B2B.
So looking at the wider context of corporate payments at the moment, how are corporate payments typically being used across public entities and the private sector at the moment in terms of payments and disbursements? What trends are you seeing in those areas?
Again, I mean, you need to, corporate payments, I guess, is what is the scope? Is the scope large companies, mid-sized companies, or small companies, or micro companies? I think, there's various positions that these different segments are in, and corporate payments being a pretty broad category. So I'd say, the top end, from a enterprise standpoint or a large public sector kind of entity standpoint here in the UK, I think it's a relatively sophisticated landscape overall. Our payments infrastructure is sophisticated and largely electronic. Payments are made electronically, and software solutions are there to help create efficiencies at a corporate level in making and managing those payments. And I think it works pretty effectively. There are opportunities, of course, depending on which part of the ecosystem you're in, to help organizations become even more efficient, both at the beginning, before the payment is made, and after the payment is made. The so-called procure to pay process, and drive efficiencies there, and use the latest digital tools in order to drive those efficiencies. And then, within the payment process itself, again, there are opportunities that companies have to, as much as they are largely electronic, to maybe make smarter decisions around which payment channels or payment rails they may be using for any given transaction. So there can be very straightforward transactions or payments, AP, through the banking network, that low ticket or mid ticket that are relatively straightforward. Then you've got the more complexity around cross-border payments, where businesses may want further help in navigating the pricing complexities associated with cross-border payments, but also hedging opportunities associated with those as well. So because where a payment is no longer just making the payment, but where you can actually book forward contracts or hedge for future payments to give you more more cost savings or to de-risk or manage risk in a more effective way. So I'd say despite the sophistication in that top end market, there's still kind of opportunities for businesses to drive further efficiency, and especially if they're global in nature or multi-market, I think there are certainly opportunities to be more efficient. Because you could move further down the scale, I think you see the opportunities emerge in a different way. I think bolting on working capital solutions to payment capabilities becomes more relevant. So how do you use smart working capital solutions, perhaps in combination with open banking, to serve up better payment options to customers or to businesses? And again, how do you bring in automation in order to create more efficiency? So that kind of large SME, maybe smaller end of the middle market, if you look at their end-to-end purchase to pay process, they can be quite a bit of inefficiency still in a relatively high volume transactional environment. So how they're getting invoices, how they're ingesting those invoices, how they're setting up workflows to manage the payment of those, or the approvals, and then the payments of those invoices, all the way through to how they then reconcile and integrate those into their general ledgers or other accounting systems. And if you look at that kind of mid-tier end or kind of large end of the SME section, there's still a significant amount of inefficiency or fragmentation in that whole process, even though the payment itself may be electronic and may appear to be efficient. It's the surround sound that drives inefficiency. And then go further down into micro and small businesses. The opportunity there again starts to change and is very different. It becomes more relevant on cards. Cards become just more relevant. Still, penetration remains low outside of your kind of debit, commercial debit card. Again, you've got working capital solutions or cash flow kind of benefits that you can provide if you've got the right set of products and services that again encourage these businesses to use smarter payment solutions. And again, cross-border, many of these smaller businesses rely on their banks or inefficient means to process cross-border transactions, often at inflated prices. They can become more efficient on the cross-border payment side in order to kind of improve their various positions. But I'd say overall, as a summary, it's a relatively advanced marketplace with still plenty of opportunity, around the added value services and optimization of what people are doing today in order to make those processes even better.
Mm-hmm. You've touched on automation there. What impact has COVID had on accelerating that trend and driving businesses to protect the cash flow with the use of these solutions?
Yeah, I think it's a couple of things. I think one is, there's the cash flow element, but even before the cash flow element, there's just the practicality of managing your kind of payables universe in an efficient way when you're working remotely. And a lot of invoicing gets sent, obviously, electronically these days, not necessarily paper invoicing, although, again, the business, they may still rely on that. Or a mixture, right? Receipts, paper, electronic invoicing, AP kind of encompasses a whole raft of things. And when you've got remote teams and fragmented teams and, AP, our own business, our AP teams, all based in one location, had a certain process, not necessarily the most efficient, but they kind of had their comfort zone around how to manage the universe of AP that we had to deal with as a company. All of a sudden you're remote, and obviously now maybe you're still hybrid or partly remote, automation has a huge, role to play in just driving not just efficiency of how you're managing that universe of AP, but also in reducing the propensity to make mistakes and errors as you become a more fragmented or more dispersed organization. So software and that front-end automation can really provide tangible benefits in reducing the admin headache, reducing errors, and also setting up payments in the most efficient way, which comes onto the cash flow piece, in the most efficient way to help a company manage its cash flow, i.e., through intelligent, AI-driven software capability, you kind of set up your payments in a way that's most efficient to you as a business, and then choose the rails that you're going to pay those through again in the most efficient way that maximizes and takes advantage of your cash flow requirements in the most efficient way. Mm-hmm. So I, COVID has accelerated the drive towards automation, the drive towards wanting more control, more visibility and transparency. And that's provided, not just benefits in managing through a pandemic, but longer term benefits as well, even, hopefully, long after the pandemic is gone.
Mm-hmm. What role do challenger banks play in the corporate payment space right now, alongside the emergence of fintechs in this space? How do you see those entities disrupting the corporate payments market?
I think it's yet to be seen and felt in terms of actual kind of, the meaningful end of corporate payments. I think most of the challenger banks today, at least the ones that I track and follow, are playing at the very bottom end of town, right? So if you're talking about pure banks in the sense of the Tides and the Starlings, Metro Bank, if they're still a challenger, Cash Plus, those kind of guys, they're at the very small end of town. So you're talking entrepreneurs, contractors, micro businesses, and their way in there is very much on a deposit taking basis. So let me grab deposits, let me provide an easy way for a new business to set up a bank account, let me provide them with the basic tools they need to operate their bank account, to get money in, to push money out. And in a couple of cases, like, say a Cash Plus, they'll provide maybe a business credit card once they feel comfortable doing so, and others don't actually provide that at all. They just provide a debit card. So I'd say they do a really good job in making it easy and seamless for a business to get started, or for a young business or a small business to just operate more efficiently with digital first tools that just make it easier for them to manage their banking rather than having to worry about branch opening times and the like. Mm-hmm. So in that sense, I think they are disrupting that startup end or that smaller end of the market. I think whether they've made inroads into the more mature end, I think is debatable, and again, a bit like any the propensity to switch your bank is pretty low, even for consumers, as we know. And I think the challenge that the challengers have, or the neobanks have, is ultimately as you become more mature, the ability to manage a business's, be a partner for them in managing their cash flow needs becomes really important. Different forms of credit, different forms of financing become important, and those banks, the challenger banks, don't have the balance sheets to be able to effectively help in that space. You've got niche ones. I mean, you've got the likes of Capital on Tap, which is a revolving business credit card, but doesn't do deposits. So they're really strong in their niche, which is revolving business credit cards, and they target smaller businesses. You've got the Tides, which are really good in kind of the bringing business, or Cash Plus. They'll bring on new businesses and set them up and provide them with tools, very low end. Then you've got obviously some specialist fintech lenders. They'll provide business lending and facilities like, Funding Circle and the like, and iWalker, they'll provide those facilities to businesses. But again, they're in a niche area, which is the lending area. So yes, they're disrupting those particular niches, but I don't see anyone specifically going in and grabbing, the place that a traditional bank has across the range of products and solutions that a business might need. And that doesn't necessarily need to happen. You can still have a relationship with 2 or 3 fintech specialists that provide you with all you need. But they're disrupting. The sense of disruption to me is in a niche rather than in a general environment, if that makes sense.
Mm-hmm. What about Brexit? What extent do you think this will impact corporate payment usage in relation to UK businesses who are doing cross-border business with the EU?
I think the only disruption would be in that we've seen would be in the ups and downs of trade, right? The act of making the payment, seems to be, really untouched by that. It's just a question of, how much business am I going to do with my European partners and vice versa, to the extent that I need to send money and receive money. So I think that would be the key driver. I think the actual act of, initiating payment, receiving payment through the various rails and channels, I think is constant and is still there. I think the other element that we still need to see play out is the whole pricing aspect, payments and how regulation impacts that or doesn't impact that. And whether, the cost of making payments starts to increase as other costs increase as well, or as payment service providers or others, are opportunistic in being able to maybe charge more than they would otherwise have charged in a unified regulated environment.
Mm-hmm. For businesses that are looking to overhaul or implement a corporate payment solution, what are the main regulations that they need to be mindful of in terms of security, data security, storage, that type of thing?
I'm going to pass the buck on that one because I'm not fluent in all those areas. I'm afraid that I probably will leave out quite a bit or get it wrong. So I prefer to.
That's fine. It's quite a broad question, I understand. Okay, so moving on. How different is the UK and Europe region to the rest of the world in terms of its uptake of corporate payments? Could other countries and regions benchmark to us, or are other countries like the US doing corporate payments a lot better and bigger?
I think it's very, even Europe, you can't really say Europe is one kind of size fits all. I'd say there's differences all over the place in terms of not just levels of maturity, but in how commercial payment products and tools are used. So I'll give you an example. In the UK, which is relatively sophisticated payments market, as we know, the sophistication is manifests itself through the use of cards for commercial payments, the use of electronic payments, bank to bank, cross border. Checks are really quite insignificant these days. It's a true kind of rounded multi-rail, electronic and digital payments market. Versus parts of continental Europe where you would see a lot of electronic payments through, say, the banking network. Take Germany through the banking network, but the sophistication of card usage for corporate payments is way lower. Or the sophistication of working capital solutions that are bolted onto corporate payments is less than say UK. And then you go to the US, which often I have to remind my US colleagues is, yes, the US might be the most advanced payments market in certain areas, certainly in plastic, but in other areas it really is lagging behind. So it's still a very big paper check market. 50% of B2B payments are still check in the US, physical writing of checks. So that presents a significant opportunity for players out there, including ourselves, to go and, obviously deliver a solution that's way better than a paper check, electronic and digital with better data and better integration capabilities. But then even if you look at their banking network, they struggle with real-time ACH or real-time bank-to-bank transfers. Things take longer, and so compared to UK faster payments, it's way more inefficient. But then you look at another aspect of it, which is cards, and you look at the proliferation of virtual cards. In the virtual card segment, I mean, US is way ahead of anyone else in terms of the adoption of virtual cards in all sectors and in all industries. Why? Well, one, because they've got a big check problem and virtual cards are way more efficient than checks. And two, because acceptance of cards, Visa, MasterCard, etc., is way higher than it is in Europe or the UK, where acceptance, the supplier acceptance of cards tends to be lower because of the cost of acceptance. It creates a barrier. So you look at virtual cards and say, okay, well, in Europe or in the UK, virtual cards, are relevant in certain or very specific verticals, like the B2B travel vertical. But if you were to overlay that into, say, the construction vertical, paying suppliers or subcontractors, just does not resonate, does not exist compared to, say, the US where it does. Mm-hmm. So I'd say it's kind of a mixed bag. There is no doubt that there is still, anywhere you look, huge amounts of TAM, of opportunity in, for payments businesses to tap into this whole commercial payment flows in a much more profound way. But I'd say the opportunities vary country by country. Certainly in if you look at a lot of continental Europe and Eastern Europe, and certainly in Asia, the commercial card opportunity is still so significant. And that's kind of an old-fashioned product that's been around for years, and still the penetration remains relatively low in so many geographies, including, by the way, the UK. I mean, it's still a relatively low penetration overall.
Mm-hmm. Looking at future trends, are you seeing partnerships between different entities across the payment value chain playing a bigger role in providing corporate payments? Is there much more activity in terms of collaboration instead of competition, for example?
Yes, I think there is, and I think if you think about my example before about kind of, it tends to be, certainly in the disruptors, if you want to call them the Fintechs disruptors, they tend to kind of focus on a niche, on an area that they can get very strong in, and then use that niche to then either broaden an offering themselves in once they've established a foot in the door, so to speak, or work with other partners in order to enable that. So, the examples of marketplaces are good examples of where, Fintechs is saying, look, I've got a captive audience customer base that's loyal and engaged. Let me go and work with partners to offer them the ancillary services they need in order to run their businesses. So, or to operate, certain areas of their businesses. So, that's a good example of one. I think the other one is open banking, and how that's creating an opportunity to again partner with others in order to open up new opportunities. So again, an example for us would be, we are a transactional B2B business, transactional payments business in the B2B side. What we don't want to do is we don't provide lending. We have no interest in providing lending. We don't need connectivity into the banking network, because there are partners and fintechs out there that can deliver at that for us, and there are obviously partners out there that can deliver open banking solutions for us that allow us to get the information, extract the information that we need. So, what we've learned is we don't have to do it all ourselves or build it all ourselves, because these are not our areas of expertise, nor are they areas of strategic value for us. So, hey, we've partnered with Modular, for example, to help deliver a product and a service that leverages the faster payments infrastructure. led work with another business to give us access to open banking data so we can then use that to serve up more intelligent information to our customers around their cash flow positions. And then we may work with a specialist lending company that then uses that information to be able to sell them a better working capital solution for their requirements. So I think there's way more openness to collaboration and recognition that that's actually a quicker way to market than to try and grab it all. And even the banks, the mature banks, the old banks, so to speak, are seeing the same, where historically it's been all about what can they bring and build and do themselves, or bring in-house, and there's much more openness now to actually leveraging the assets that these smaller, more nimble players can provide.
Mm-hmm. Would Fleetcore be considered an ideal case study for any business that's looking to bring more efficiencies to corporate payments by using your solutions?
Yeah, I think it depends. So yes and no. I think it depends on the geography, because in some geographies, like in the US, we have a full suite of capabilities, and then in other geographies like the UK, we have part of the puzzle. So, we help businesses today, with managing their fuel card headaches and processes and payments and digitization of that whole side of things. And over the last couple of years, we've branched out here in the UK to provide more holistic AP payment solutions to our businesses, again, leveraging some of our assets. And we're still building those capabilities as we go along. So I'd say, yes, there are, depending on how extensive we want to go, there are things that we could absolutely showcase. And it would be quite interesting because we'd be coming at it from a different angle. Say if you're a construction company or a logistics company, and your ability to do business is reliant on you driving around, then a big chunk of your headache, of your operating expenses, are going to be tied to fuel, tied to your drivers, tied to your fleet, and tied to the spend around that. So I've got drivers driving around, construction projects, I've got old trucks or whatever, I've got fuel costs, I've then got costs for maintaining those vehicles, I've got costs for maybe managing the staff that are out and about, and the costs that they incur, and then I've got to buy goods and supplies, whatever it might be, aggregates, wood, cement, whatever it might be. So there are various areas that we have solutions to help with. That can bring that together. And what we're doing now is we're also, building out AP automation through a company that we've acquired in order to help kind of, again, drive more efficiency. So I'd say, there's stuff that we can showcase. There's still some stuff that's imperfect that we haven't got a huge amount of track record on because we're still building it. But depending on what the need is and what would be interesting, we can certainly have a look at it.
Mm-hmm. What would you describe as being the essential components of implementing a corporate payment solution in terms of using commercial cards or automated bill payments, procure to pay payments, that type of thing?
You mean as a company, as an end user, as a business?
As an end user. For a business that's looking to optimize its corporate payment processes and B2B payment processes, what would you consider to be the key things they need to implement?
I think they need to look at see where your the low-hanging fruit, kind of the headaches are, and where the inefficiencies are at the front end. So are you receiving a lot of paper invoices and having to manage those? Do you have a lot of employees that incur expenses that you need to figure out how to manage and reimburse? Do you have needs to buy supplies quickly, immediately, and take advantage of online online buying prices versus other buying prices? So what's kind of the problem statement for the company? And different companies will be in different positions, and then based on that, really there could be easy solutions to implement, you've got employees that travel or on the road, that go on business trips or day trips or whatever, and you're making them incur out of pocket expenses, pay for it themselves, and then figure out how to get the money back. You obviously want to see receipts, and or you're advancing cash to them, which would be a silly thing to do. Just give them cash and then give me back receipt. I mean, if you're still a business that does that, well, in not very long, you can change that and make your business completely, more efficient, and actually provide it with even more control, not less control. So obviously what businesses sometimes feel is, oh, if I give you, my employer company business card, then all of a sudden I've lost control and you can go and run amok. Whereas I think, what we see in most cases is, employees take that take that seriously. It's a sense of responsibility. And obviously an electronic transaction gives you full transparency. If people are misusing something, you've got a visibility of that straight away. So, the first step would be, hey, if you've got that kind of dynamic in place, then a commercial business card, corporate card, can help you be, more efficient and actually a better employer, because you're looking after your employees and not having to have them, worry about where to find money to pay for some kind of business expense and then wait for reimbursement. So that's like super low hanging fruit. Then, if you move up the scale, you then think, okay, so how does this help me with my cash flow? Or if I'm receiving lots of paper invoices and I'm having to employ somebody to kind of go through those paper invoices and transcribe those or rekey them into Excel or to some other accounting software package, or I've got to scan it, and sometimes the software that scans it doesn't quite read everything, so I'm having to supplement that with manual input, and then I'm going to have to figure out the dates and when to pay who, and remember to pay that person then and the other person another time. How many people have you got doing that, working on that, depending on the size of the business? And if you're a tiny business and you've got 2 people working there, well, guess what? One of you is going to be doing it, right? And that takes away from your ability to run your business. So, there are software tools already there that can help simplify all of this and make your life easier. So I'd say, try and identify the low-hanging fruit first. What is your biggest problem statement first? Oh, I've got to manage these people that are out in the field. Okay, well, there have been tried and tested solutions now for years that can help you manage that much more efficiently. If your problem is, actually, I don't have people traveling, but I'm just, I make a lot of payments, a lot of suppliers, then you've got another set of problems that, hey, you can help it. And by the way, the whole making tax digital thing, which I know keeps getting delayed here in the UK, is a huge driving force, behind obviously the need for businesses to become digital, but also to adopt smarter ways of managing their payments. Because if you've got to become digital in how you're managing your invoicing and your receipts, then obviously the payments themselves being digital helps enormously. So I think that's going to be a big catalyst. It's already a big catalyst for adoption of corporate payments solutions.
Fantastic. Okay, so to wrap up, how would you describe Fleetcore in terms of offering the right solutions to the marketplace, and what are your growth plans for the next few years to capitalise on the success you've had so far?
Well, I think it depends. Again, it depends on the geography. So I think if you look at us globally, I think we've done a good job of growing our position as one of the biggest B2B payments companies globally. We are predominantly diversified B2B payments business in the US, and I think our mission in Europe, this side of the world, is we need to diversify further, and provide. We want to become that kind of one-stop shop for your commercial payment needs. Not for lending you money, but we'll provide some working capital solutions, obviously, to help you manage your payments effectively and efficiently. But we're here to provide. We'd like to provide a better digital set of solutions for companies to be able to manage, ingest, manage, and make their payments. And that's kind of our mission. And the kind of the full end-to-end experience that we'd like to deliver, and we think we can deliver, and in some cases we're delivering it already, is we provide you with, as a company, with everything you need from, managing the stream of invoices that you take in as a company, cataloging those, digitizing those, queuing those up, managing the payments effectively, managing the channels and the rails on which those payments are made, providing working capital solutions where we can and where we want to support those payments, and then obviously making sure that all of that gets integrated and reconciled into your accounting software or ERP system. We can be kind of that full partner without necessarily, because we have no desire to be the deposit taker. We're not the bank. We don't need to have that relationship, but we can provide that more efficient way of actually managing the payment without having to disrupt the bank account relationship that any given business has. So, our strategy will be to continue to grow our presence in that B2B space, both for domestic payments and cross-border payments. And we're doing that through building solutions, but also acquiring and buying businesses that have those solutions already.